Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to cover really the first Monday of 2025. For me, it's one of those days where I want a game plan. I want to take my time. I want to dip a toe into these markets and figure out exactly where they may be going, not necessarily what they're doing today. I've been watching the U.S. 30 closely. Really choppy whipsaw action. We had a big-time trend day going, and then we saw the reversal. We saw the same thing in crude oil, and gold also sort of been all over the charts. So we're definitely dealing with an active news cycle right now with it being election certification day here in the United States, and I'm seeing some turbulence in the market. Now, right now, stocks are up. I will not shock me if we give back all those gains, but we definitely, what we want to look at and what we want to do is make sure that we've got a good, solid game plan moving forward this week. We don't want to dig a big hole on a Monday, and a lot of times, unfortunately, that's exactly what happens. So, good to see everybody back. Matebi, good to see you. Welcome. Dibble, always a pleasure. Dibble, welcome back for 2025. Mark Corb, hi, Shane. Did you have a good weekend? Yeah, it was pretty good. Wasn't too bad. Sort of fighting a little bit of the norovirus here with a little bit of having some stomach issues, but that's okay. Feeling pretty good and ready to trade. Been sort of a slow day on this end. Took a few just real tight scalps, but nothing really to write home about. So we definitely want to make sure that we're moving forward in a cautious fashion. So if you guys want to trade, be sure to pipe in, check into switchmarkets.com. I got a private message from a new client, a new user the other day. Said Switch was satisfied their needs. So that's absolutely fantastic to hear. And let's get off on the right foot here. Monday, certification day. That's the biggest news item. We put a YouTube short out a little bit earlier today that had to do with be on the lookout for any sort of news surrounding the certification. Remember, January 6, 2020 was a big day. We're not expecting any of that to happen here in the United States today, but we are definitely on high alert because we had those terror attacks in New Orleans and in Las Vegas that we covered last week. And realistically, the nation's on high alert right now. A lot of the inside intel is really expecting another terror attack. Today was one of those big days they thought could happen. Also, Inauguration Day on January 20th. So there's a lot going on here. There's absolutely a lot going on here. Be careful with this market. We don't want to rush in. We want to be patient. Trailblazer, good to see you. Trailblazer, welcome. T Marina, always a pleasure. Happy New Year, T Marina. Moses Shama, hi Shane. I'm doing well, Moses. Happy New Year to everybody out. To me, this is when the year really starts. This is when it starts for me. Last week, we did a couple of live streams. It didn't really do much for me. I was like, we haven't really started yet. We started today. The markets are off and running, and right now, the Dow 30 is in a free fall. We're going to get to our gold idea here in a second. But the big thing today is certification day. That's the number one thing that could potentially shake the markets up. Number two is EU CPI tomorrow, ISM. Wednesday, ADP and the EIA crude oil numbers. Thursday, weekly jobless claims. I don't particularly put much stock in those, but they could definitely be big this week. And Friday, U.S. non-farm payrolls. Will be in the saddle with you live, so be sure to tune in either on YouTube or any of our platforms, or come on by the trading room here at How to Trade. Let's start off with the trade idea I put out a little bit earlier today. I'm watching gold closely now. This is one of those trades that I think is it's a good one. This is what I call a washout trade. Now, I don't put too many of these out there. I really don't put too many of these out there because the washouts don't come along very often. In my view, this is a pretty good situation for a washout. And what it is basically we're looking to sell that spot gold beneath last month's low. So if you go ahead and check out price action, I've sort of got it lined up on my chart. And you can see last month's low is right down there, right around 258 or 25.83. So you're going to want to be looking right down in that area, right beneath last month's low, to potentially get that downward price action. Now, the reason why is we're fully in an uptrend, in a full uptrend. Dragon 131, good to see you, Dragon. But in any case, you've got really a stiff uptrend here in spot gold. And what we've had since the U.S. election in November is we've just had price action that's moved absolutely sideways. And what this means to me is, the market doesn't know what it wants to do. Could the top be in for gold? I saw Goldman and Sachs report earlier today that said gold's not going to reach 3,000 in 2025. I went, wow, things really have to go wrong for us not to at least test 3,000 in the next 12 months. But we're expecting a lot of things to be different, and one of them is going to be your U.S. leadership with the Trump administration. But number two is going to be geopolitics. We're already hearing that there's talks scheduled in Russia-Ukraine for early February, late January, potentially peace talks. Peace and stability mean gold goes down. Also, rate cuts. If the Fed doesn't cut rates, it means if they don't continue to cut rates, if they hold them where they're at, or maybe even hike rates, that sends gold and commodities down. So I'm definitely interested in this gold market. I really like this washout, so I put the trade ID out. Check it out if you're interested in taking that trade. But what we're looking for is right beneath this low. You've got to think there's a lot of retail longs located right there, big block orders. As soon as we hit that low, I fully expect us to sell off quickly, just as we did in November. We saw a big washout underneath October's low. So if you're looking to take that trade, check the trade idea out. That'll sort of show you how to play that washout. Now, from a broader perspective on gold, what I would be very focused on is the breadth and the size of this trend. This is a big trend. The bottom line is 1980. We started this rally down around here at 1980 back in February of last year, and then we saw just a tremendous rally, and now we've got sideways trade, and we're really looking to get that break to the south right down there to 2480. I think, personally, if we trade beneath last month's low and we don't see any more terror attacks or anything like that, I fully expect us potentially by the end of January to be down here at 2480, maybe sooner. Now, for me, that's definitely a buy. About $150 off. If we do sell off down there, we're buying 2485s all day. I think that's a pretty good little void that we can capitalize on. I'm fully expecting that. Let me see. Mutebi, oil on the 4 hour. Yeah, I'm going to go ahead and look at U.S. oil here in just a second. Right now, I've got sort of one eye on the news feed. I got another eye on the market, so there's definitely a lot going on. I'll tell you what, we can certainly check U.S. oil out if you'd like. One of my favorites, 30-minute chart. You can see right there sort of your opening bell this morning. The NYMEX open, ding, ding. Saw a nice rally and then a reversal. And now we're coming off in a big, big way, and we're looking right around 73.51. So I personally was looking at this top up here. I was pretty much a seller right in front of 75. We talked a lot about 74.95 last week. Boy, howdy, did that work. I mean, that called this thing. What's our high today? 79.99, 74.99. That was the futures high. That spot market high right there, 74.96. That was the top. So we know we have sellers up there at 75. Now that sort of plays into our longer term bearish view of the market, which says that higher interest rates for longer and drill baby drill under a Trump administration is going to send crude oil down. Now I fully believe that. The real question is what kind of timing are we in? Well, we're still trading 73.50 in January. That is incredibly bullish for WTI crude. But for right now, it's been pretty bearish really since that big bullish beginning. This was really a nice price bar if you wanted to short up there. It was absolutely beautiful right in front of 75. So what can we do now? Well, let's step back. I mean, if you want to look at a 4-hour chart for WTI crude, I don't particularly do that, Mutebi, and the reason why is all of our volume potentially comes into the oil markets during the U.S. session. So if I'm an intraday trader, I'm going to focus on my 30-minute. If I'm a day trader or a position trader with U.S. oil, I'm looking to get on my daily chart, and this is a great daily chart right there. There's your big bullish run, and you know exactly, those of you that have seen a few of my live streams know exactly where I'm going to target. That right there is going to be our spike low, 69.36. That right there's your void. We got a pretty good void. We got a pretty good bubble down there to 72.83. That would be my bid zone. I'd be bidding 73s, maybe 73.09 to be aggressive. Something like that could be very good, very, very good. So right now we've got pretty good bearish pressure, 73.45. We're beneath 73.50. We could absolutely get that bid down there and be in pretty darn good shape here late in the day. So I'm watching that closely. If you wanted to be a little less aggressive than that, then you could wait for 72.85, maybe 72.89. But I wouldn't wait around. I think if we do get a chance at that 38%, I want to bid, and I want to bid aggressively. This is a pretty good time to do just that. Now, the only thing that can really derail a lot of these trades, and I want everybody to be very, very, very conscious of what's going on today, is the certification day. It's the congressional certification in Washington, D.C. Pretty much everybody here in the States remembers January 6, 2020. You probably have different opinions. There's many different opinions on what happened that day. What it didn't do is it didn't shake the markets up, even though it was a supposed insurrection and really a breach of the Capitol building. So this is interesting to me today. This will be the biggest story. Right now we're monitoring it. It's supposed to come off without a hitch. We're expecting this thing's supposed to be certified a little bit later today. So we're all watching. And you can see right here, you've got all sorts of headlines breaking about an hour ago. We've got just political grandstanding going on. Not anything hardcore, though. Nothing hardcore, meaning no new terror attacks, no disruption of the process. That, to me, is the biggest market driver today. And I have to be honest with you, I'm seeing that reflected in the price action. So remember, if in fact chaos does ensue this afternoon, a little bit later today, then you will see things like gold go way up. You will see stocks come way down. You will see crude oil probably go up and react as a commodity type of a hedge to that angst. But the big thing that we have to do is, if we're serious about watching risk, we watch our VIX. What's the VIX doing right now? The VIX is down. The VIX is down about 0.62%, still pretty flat. Had a nice big negative day on the VIX last Friday, off about 10%. And now we're just sort of trading sideways. So when I take a look at this, chart and I say, okay, what is the VIX? It's a volatility index. That's Wall Street's fear gauge. That means that when there's angst in the market and people are scared, the VIX goes up. We're not seeing that. Now, we saw a tremendous rally back there. You remember that Fed meeting back on the 18th of December. We covered it live. A lot of you were here. But right here, the VIX is low. The VIX is down around 16, 21.35, 21-ish, 22-ish. That's sort of your long-term action level for the VIX. So I would be very, very interested to see what happens with the volatility index, especially because this VIX is a function of deferred month S&P 500 options premiums. So when those options premiums start jumping all around, the VIX goes up. Well, the VIX is down. We're very, very low. This suggests that the bullish market that we've seen for the last, really since COVID, is going to continue. I'm watching the VIX very closely, especially on a day like today. So can you trade the VIX? I get that question a lot. You can. You got to go to the CBOE, or you have to get a CFD product that tracks the VIX. I'm not interested. I'm not interested in any of that. I just look at the VIX as a barometer. All right, let's get on to some currency pairs here. Absolutely huge that we get an idea of what's going on in our Forex pairs. If there's any other markets that you guys want to look at, feel free. Throw them in the live chat on YouTube, wherever you may be watching. Throw them in the live chat here in the trading room. Let's see, Bobby Bob, good to see you. Too late to be here. No worries. We're just getting started for the year. Let me see, Brian Barbie. Thursday markets are closed for Jimmy Carter Memorial and Funeral. That's a great point, Brian. I was going to sort of reiterate that point a little bit later today, but you got that. You stole that. That's a great observation, because we saw the same thing happen when let's see, the last president that died was Bush 1. So when the first Bush, what was it, Herbert Walker Bush, when he passed, we had a market closure on a Wednesday. So you will have a market closure there, and we'll be looking at crypto and Forex, but Friday's NFP, and that's the big one. That's the big one. We'll also still get those weekly jobs reports Thursday, so there's a lot to talk about in any case. In any case, right here, Thursday, Euro USD. Thursday, will it be a big day for the Euro USD? No, not really, but right there's your daily chart. Interesting stuff. Now, typically what I like to do is I like to try to figure out market direction first and foremost. I got this question a lot in Q3 and Q4 last year. Where is the Euro USD going? Where is the Euro USD going? I love big round numbers. Love them. Hard for me to look past par value at this point. Now take a look at this trend. This has been a serious trend right here. What happened there? Late August. What happened right up in here? September. That was when we got the half-point rate cut from the United States Federal Reserve. Since then, what's happened? The dollar's done nothing but gain strength. Why do you think that is? Because we don't think there's many more rate cuts coming, if any, this year. And we're going to talk more about Fed policy as it becomes time. But take a good look at this chart. Very important. I think the Euro USD goes to par value. So what does that mean for me practically? It means that I would like to sell it. I would like to sell it on a retracement. We sort of have broken price action here on the weekly chart, though. It's not the best trade locations in the world. You could probably sell that order block right there. If you're a smart money concept trader, you see that's sort of the top of the most recent price action. You'd call that sort of a, what is that, the market structure? Market structure is bearish, but this wave right in here, there could be a potential liquidity sweep that develops from right up there. I've also got my 13-week moving average up there at 105.62. So I have no problem selling 105s. The real question is do we have anything that can help us make the decision? For me, it's always Fibonacci's. I like to be consistent. In my Fibonacci's, I've got a spike high right there. I've got a spike low down there. Something like this. 106. That sort of lines up pretty good with our little value area, doesn't it, in our weekly change of structure. That's where I would be looking to sell, probably right up in front of 106. Now, right now we're at 103.82, so we're way down the queue, about 200 points, somewhere in there, 200 pips. But if, in fact, we do get a big-time rally on today's NFP, then we'll have an opportunity to get short this market. I think that it's certainly possible. I don't expect the USD to stay as strong as it's been. Right now, the dollar index is up around 108, 108.31. I don't believe it's going to stay that high, but I do think it's going to be strong throughout this year. I don't see the dollar really going in the tank unless we see something crazy happen. Now, as far as this goes, this area, probably 105.50, somewhere in there. You always want to shade your entry on a Fibonacci retracement somewhere right up there, right around 105.50-ish, somewhere in that zone. Probably a pretty good entry. Give ourselves a chance to grab that position to the bear. And also, remember, if you are a smart money concept trader, I know a lot of you are. Let's go right here to the weekly, weekly. You'll see that right there, sort of the top of that area. We would be looking sort of for a liquidity sweep. Either we go up and take out that swing high and then reverse, or we stall out somewhere in that order block. I think that's probably more than likely going to happen there. I would love to sell this, though, but I just don't want to sell it right now. If you take a look at what's happened in the last 4 hours, the 4-hour chart. Now, this is something that I really do like. I like the 4-hour chart on Forex. I think it's probably one of the best intraday time frames that you can have. If the markets are really live, we could trade it on real short time frames, but when they're not, when you're just trading a conventional trading day, something like today, 4-hour chart's great because Forex markets move 24 hours a day. So what are we looking to get accomplished here? Well, we're looking to join the pressure. It's real simple. We're not trying to reinvent the wheel here. What do we got? We got a nice sort of real choppy. Nobody was in the market. We saw a little bit of movement there on the Thursday, January 2nd, but nobody was really in the market last Friday. So what do you got? You got a nice big break here to open the week. Pretty bullish. What could we do? We could buy it. Sort of already missed the 50% area. Take a look at the back end of our Fibonacci golden zone, though. I've got a 13-period EMA right there, 103.40, and I've also got a 62% level at 103.35. This area right down in here, not too bad. So if we get a pullback down there, I'll probably be a bidder from that zone. We need something to be the catalyst to sort of stir the pot and get these markets going. Let me see, Mutebe, Great Britain Pound USD, absolutely. Let's take a look at, we got a few fundamentals to cover, and then we'll go ahead and get on that Great Britain Pound USD for you. All right, there's news events and then there's news events. If anything happens at the Capitol today in Washington, D.C., it will be a much bigger deal than this slate of numbers here. Now, you'll notice on the chart or on the docket here on our economic calendar, you'll notice a 3-star event is being assigned to the S&P Global Services PMI. And it came in, is that a market mover? And the answer is no, it's not. No, it's not. But take a look at where it came in. The S&P Global Services PMI, basically that's just a broad measure of the service industry. And these types of numbers, I call them academic numbers because I don't believe they matter. But what I will tell you is a lot of traders watch these and economists watch these, and this is one of those things that they try to decide if we're going into a recession, if we're out of a recession, what could we potentially be doing this time next month economically. That's all these are for. Can you trade these numbers? I wouldn't bother. The PMI number, watch the news, especially when there's politics involved. We saw just incredible price action based on last year's election. We're not quite done with the election yet, believe it or not. In any case, right here, 56.8, it came in a little bit beneath expectations, but above the previous release. You just crumple that up and throw it away. It just doesn't matter. And then the rest of it, the one thing that I would point out that we're going to monitor a little bit, I'm not going to get into like deep dive talks about interest rate expectations and what we expect the bond market to do, because I don't believe anybody in here trades bonds. But I will say that as a bond, I won't say a bond trader, but as somebody that watches the U.S. dollar closely, I'm always watching bond yields. And the reason why is when you see those yields go up, we're sort of anticipating a stronger dollar. Now, if we see the yields start coming down, then we'll be in a position to maybe go, maybe we're not going to get quite what we thought out of Fed policy. So I'm looking for movement in the yields. Right now, the yields are down a little bit week over week. That sort of suggests that maybe the dollar's not going to stay as strong. There's going to be more dollars in circulation. But I have to tell you, after covering Jay Powell for the last 4 months, I believe the dollar is going to stay strong. So these yields, we're watching them closely for clues and sort of hints on the future of monetary policy. Lita, good to see you. Good morning. I hope you're doing well. I'm confident everybody's doing well. We don't hope. Hope's for children and losers. We don't hope in here. We're confident in what we say. We're confident in our trades. And even if we lose, even if we get banged up in the market, we're going to keep doing what we do, and we're going to be here in August September, October. And by then, we will have broken the game. That's the way I look at it. Always think about that in January terms. We are just getting started. Let's start out slow. Let's build that account. And then let's look to get involved when the getting's good. And that's probably going to be, first week of the year is always sort of a challenge. This week more so than most. We're going to be just fine. Build early, pile on the leverage when you're playing with their money, and then we go to work. Then we go to work late in the year, and we make a good year a great year. That's the goal. That's the idea. Let me see. Moses, how do I trade using Fibonacci? Well, the best thing I can recommend is just check out a live stream or two. Head into the How to Trade trading room. Get signed up there. Get in. Check out some of our Academy videos. Send me a private message. I'll show you exactly where to find the Fibonacci Counterpunch series, and I sort of show you exactly how to do that. And also watch for workshops. I go over those as well. But for right this minute, and we cover a lot of strategies here. I want to thank everybody that joined us Friday for Friday's strategy session. We're going to be putting out another video, not this Friday, but the following Friday, and it's going to have to do with some moving average stuff that maybe you can apply to your own trading. I know a lot of you really like that stuff, and that's great. There's absolutely nothing wrong with that way of trading. Just be disciplined. All right, Great Britain Pound USD 4-hour chart. This is where I would start with trading. Now, it's going to look exactly, not really exactly, but a lot like what we just did for the Euro USD. You're going to be doing something like this. You could basically go off of that spike low that's behind my picture, or you could go somewhere up in here. What we're looking to do is we're looking to find a range that works for us. So right there's a low, 15, 15.7. Okay, we don't quite have a low. Where's our spike low? Low's 87, right there. Now, the reason why I would start right there with my Fibonacci retracement sequence is because that 3-candle pattern, I call it a spike. What is that? It means that this second candle, the low is lower than the first candle, and it's lower than the third candle. That would be a spike low. A lot of folks call it a swing low. Call it whatever you want. Something like this. Interesting. 124.87, not bad. It's not a bad trade. You could probably scalp from there if you wanted. I would do the same thing as I just recommended on the Euro USD. I'd be looking at the back end of my golden zone, which is my 62% retracement, right around 124.50-ish. And you've also got a 13-period EMA up there at 64. I would say that's more than likely your bid. Now, the question would become, Shane, how do you trade it? Well, for me, it'd be relatively straightforward. I'd be looking for a pullback somewhere probably right around 50, 124, 124.52. And then I would be looking to probably risk 20 pips to make 20 pips, a nice tight 1-to-1 ratio. I want to start the week on the right foot. That's what I want to do. Something to think about there if you're interested in the Great Britain Pound USD. Now, from a macro perspective, it's going to look really a lot like what we just had for your Euro USD. This spike high last week sort of messes things up with our weekly symmetry. I'm not a big fan of that. Let's go to our monthly and see what our monthly looks like. I always like these anchor points. I think the anchor points are incredibly useful, and they're awfully accurate. So when we look at something like this, perhaps, 127.67, it's way up there still. But one of the great things about taking a look at longer time frames is take a look at what we got right there. What is that? It's 2024's low. Keep that in your brain. Mark it on your charts. Those long-term levels, they draw action. Institutional traders, we got a video dropping Friday on the How to Trade YouTube channel. When we start talking about, hey, what do institutions do? They're not necessarily looking at price charts like us, but things like yearly highs, yearly lows, they really are looking at those. 122.93, so we're looking at about 123 even. That 123 even could be a really great trade. What do we have thus far this year? 123.52. I'd be looking right around 123 as a potential bid to the top side. That could be a real good trade. And best of all, it's easy. Best of all, it's a pretty easy thing to identify. All you have to do is pull up a chart and take a good look at what's happening from sort of a macro perspective. So let me see. All right, we got a couple questions here. Trailblazer FX, what advice would you give to someone aspiring to transition from a beginner to a professional trader? Aspiring, well, the biggest thing is just to prove yourself in the market. So if you're a beginning trader and let's say, let's say you survive for a year. Let's say, you're in the market and you say, okay, Shane, I've traded, 200 sessions. I've slugged it out with the markets and I am still standing. Okay, so after that long of a period of time, or let's say even 6 months, let's say you've gone into the market for 100 sessions and you've made money consistently. You started with a few $1,000s and you rolled it. Maybe you rolled 2,000 into 10,000. Maybe you rolled 10,000 into 60,000. All right. At that point, after that consistency, then you would say, okay, I'm making the transition to being a professional trader. Now, what that would entail is you need to have enough money to meet your financial goals. So if you're going to quit your job and get away from everything else and trade, you've got to make sure that you've got enough money to weather drawdowns and take positions large enough to pay your monthly nut. That's what you have to have. Now, as far as being an amateur to a professional, to me, I mean, I don't believe there is a line in the sand where you go, okay, I'm a professional trader now. I think you're either a good trader or you're a bad trader. I mean, we all have good and bad days, but it's the ability to weather the bad days and have those good days carry you that really is what this is all about. And I'm of the opinion that, there's great, I watch college football and professional football a lot. There's some great college football players out there. And the only difference between them not being called pros is a paycheck. So I think you could be a great trader and not even worry about, well, I'm an amateur or a pro. I wouldn't even worry about it. But if you're going to make the transition to this being a full-time gig, then you're going to have money and you're going to have that track record. You're going to need to be able to look in the mirror after you took a $1,000 loss or a $2,000 loss and say, hey, I'm going to be just fine. I've been doing this for a long time. I'm going to be just fine. So that's definitely something to think about. I think that that's a great question, though, Trailblazer. What advice would you give? Have enough money and have a track record and be confident. Be confident with your trades. That's what this is all about. It really is. Just keep showing up. Trade for tomorrow. Save your money. Don't blow it out just in one day. Unless you're trading a prop account or something you don't really care about, then I don't care if you blow it out in a single day. But if you show up with your hard-earned money, boy, take care of it. Respect it. Take care of it. All right, let's see. Lebo, good to see you, Lebo. I heard some people trade without using any indicators. That's 100% right. Let's go ahead and pull a chart up. Show you exactly what that looks like. Let's see. We'll go right here to chart patterns. All right, this is a video we made, Death Cross. You guys all know what the Death Cross and the the Golden Cross are, I'm sure. So what would it all be? So this would sort of be how we would be trading. So right now, if we were looking at that Euro USD, there's no indicators on there. This is just a complete price action. A lot of people that are smart money traders would try to identify which swing highs and which swing lows and which order blocks are going to be important. If you were a smart money or potentially I can't even remember what the it's SMC, and I can't remember the other one, other sort of abbreviation for that strategy. But essentially what they do is they go there and they look for areas like that, saying, okay, what'd you have here? Well, we had a big sell-off, then we had a retracement, then we went sideways. That area is going to be resistance. Breaker block strategy, order block strategy. We made a lot of videos on those. Check them out on the YouTube channel. But this area would have said, okay, I'm going to just go ahead and sell in this zone. For me, that's problematic. I just fall back on Fibonacci's. So instead of looking here, I would say, okay, my price action, my entries are going to be predicated upon using my retracement tool. That's that simple. So, I mean, I'm prepared to trade without any indicators just by using the Fibonacci's to measure price action. But a lot of people just use the smart money stuff. If you're interested in that, go ahead. Problem with all indicators is they're all lagging. You're never gonna predict price action with an indicator. That's hard. You almost have to look at the charts themselves and make your decisions from there. But I like indicators because they give me a good idea what's happening. I use a 13-period EMA. I use Bollinger Bands, set of Bollinger Bands, and then my Fibonacci's on top of that. That gives me an idea of what exactly is happening. Interesting stuff, though. All right, let's take a look at silver real fast, and then I want to look at one other news item that we have to start the year off. I'm not trying to bring a bunch of bad news, but there's some things that we've got to be ready for. Okay, right here, we were really warning people in a big way that if in fact December does wash out November's low, that's what you're looking at. And we got that big retracement. We just didn't quite get entered down here. I'm still looking at that being huge, and I mean huge, downside support for silver. So what we've got there is we've got a 13-month EMA, which is right around 28.69-ish, and then we've got 78%, which is down there around 28.30. That's going to be a pretty good area, that 28.50 area. Straight across, maybe 28.55. I really like that as a downside buy. I think we're going to get an opportunity to bid that area in silver, and it should come relatively shortly. All right, everybody. Let's see. Wouldn't be a party without getting in on a futures trade or two. We've got a few things here. I've got some downside range numbers. That's all secret sauce, so we're not going to get into that. But the red lines, those are going to be sort of downside, what I expect sort of the bottom of today's market to be. Let's go to a 30-minute chart. I really like my range numbers. You can see right up there, we called the top of that beautifully. And now we're sort of basing out, and we're waiting potentially for this to be the bottom of the market. This was an absolute tremendous sell-off in WTI crude oil futures. If you were an order block trader and you didn't use any indicators, I can already tell you, 30-minute chart right there, that is probably where you'd be looking to sell. Now, there's a lot of other things we could do, TPO charts. This is a big one for me. Time price offering, sort of an old market profile trick, but you'll see right there was sort of your dashed line. There's your dashed line. That's a key value area for today's session. This right here is going to be your point of control. That's called the POC, the point of control, and that sort of tells you where a majority of the business is taking place today, which price point, and that's right around 74.22, 74.20. So if I was playing this, we're not really trending. We're down about, 0.82% after being in the green. This has been a tremendous, and I mean a tremendous sell-off. I would be looking for potentially a return to the point of control, just maybe by the end of today or early tomorrow. So something like that would be interesting. Then we'll talk more about TPO stuff. If you guys are interested, we could probably make a video or so, and that'll be about it. Let me see, T Marina. So if I wanted to generate around $2,000 a month in my trading returns at a 4% return value, I'd need $50K in my trading account. But how do I know if 4% is too high or too low for me? History. You know, it's easy to hire a signal provider and just say, okay, and they'll come in and say, okay, I've got an 80% win ratio or a 79% or a 50%, and here's how you trade my system and it's profitable. I don't believe in any of that. You know, I don't believe in your percentages. What I'm saying is, T Marina, your 4%, some months your 4% may be high. Some months your 4% may be really, really low. So what I would say is if you're serious about establishing a hard value, a hard 4% win rate or edge, then you've got to either build a system and do some back testing and say, okay, if I trade this way, then that's 4%, should be what we receive every month. You can do it that way. That's flawed because you end up backfitting your system to the data. And the second way to do it is just to get in here, find a strategy, learn how to trade, and sit there for three to 6 months and say, okay, I made roughly, if I averaged it out, I made 4% each month. The problem is when we hit 4, how are you going to execute? When you hit 4%, are you going to quit trading for the month? If you hit 4%, is that it? Or do you keep trading up to 8% or 12% and then come back down to 4%? It's really hard, guys. I mean, it's the $1 million question. What I would recommend is focus on learning how to trade, get yourself a strategy, focus on executing it as good as you possibly can, as well as you possibly can, and then just go for it. Get in there and trade hard and see what your returns look like. The biggest thing no one will tell you in this game on YouTube or on any of these live streams is the biggest killer isn't necessarily your win-loss ratio. The biggest killer is consecutive losses. It always has been and it always will be. Because let's say, I've been talking a lot about the YouTube folks because I've been watching a lot of these traders on YouTube, something I really haven't ever done. And I watch them and I say, okay, how many losses in a row do you have? Well, by the end of the year, I ran 20,000 into 2.5 million. And I go, but how many losses in a row did you have? My point is this. Some folks just take 5 or 6 trades a year and then they step back and they brag about how much money they made. My problem is maybe they won all 6. Are they going to win all 6 next year? What happens if they lose 3 in a row and those risks are too big? Work out your risk on a per trade basis. Make it a percentage of your account. And then after 100 trades, 200 trades, if you're a scalper, which you could probably do in a month, then you'll have a good idea of your win ratio, your positive expectancy on each and every trade. That's what I would say. If you're a swing trader, somebody that doesn't place many trades, give it a go for 3 or 4 months. Get in there and see what happens. Maybe after 90 days you go, I'm killing it. I'm doing really well. Keep doing what you're doing. Don't ever let me or anybody else scare you off a winning strategy. That's not fair. That's for sure. Set my value percentage, thumbs down. How to know? Thumbs down. Let's see. I've done that back testing, but you say not too reliable. Drawdown. Yeah, with back testing, you got to be careful. Yeah, I recommend everybody does back testing on their strategy just to get an idea how the thing functions. I really believe that's key, but don't do your back testing over 5 years or 2 years of data or 6 months of data and say, okay, this is what I can absolutely expect today, because it's not necessarily true. But that sample set, you do a lot of that back testing, then what you can do is you can say, okay, study the losses. How many losses in a row did I have? How big are my losses compared to how big are my winners? When I risk a little bit, do I lose? When I risk a lot, do I win? And that way you can sort of learn the efficacy of your strategy. So I hope that helps. Yeah, drawdown is all about figuring out your max drawdown and how many losers in a row you've had. To me, that is the most important part of back testing. The rest of it, we all run Monte Carlo simulations and we go, wow, I'm going to make $20 million doing this. Well, maybe not. All right, everybody, one last story, then we're going to go ahead and get off. Keep a close eye on this. This has been breaking. We're talking about the HMPV virus outbreak in China, and I can tell you that look out. This is already getting floated. There's already a lot of talk about vaccines. There's lots of talk about also your lockdowns. We're not there yet, but we could get there very soon. All right, I hope I helped as many folks as I can out. If you have any more questions, cruise by the trading room. Go ahead and give it a look. Right now, we're watching that gold breakout pretty close. We covered that at the beginning, and our trades for the CL, we're watching. I think we're pretty close to the bottom here in WTI crude today. Euro USD, we got some good levels. Great Britain pound USD. Any questions at all, swing by the trading room and ask me. Other than that, I'm glad to be back for 2025. Last week, we had a couple streams, but we weren't. Liquidity wasn't back. It is back now. It's time to trade. I'm looking for business to get even hotter tomorrow, Wednesday, Thursday. Thursday, not so much because of Carter's funeral, but Friday, NFP live. We'll have it live for you. We'll do some live scalping. Also, we'll fire up a few of those strategies folks like, probably the 920. I really like that 5813. I think we're just going to make a video on that separately. Brian, COVID 2.0. I don't know what to make of it, Brian, but I'll tell you this. Tried bird flu, and that really didn't work in December. And now we've got HMPV. I mean, I don't know what it is. We'll see. All right, Dibble, thanks for coming back. But may you all have a fantastic new year. If, in fact, we get started here, start on the right foot. And if you don't place a trade today, there's nothing wrong with that. Tomorrow's going to be a big-time trading day. It's going to be one of those you want to be involved. All right, thanks. You're absolutely welcome, Marcorp. Okay, all right. You guys have an absolutely fantastic trading session. Trade the action well, and we'll talk soon. See ya.